Well, welcome, ladies and gentlemen, to this live webinar. Thanks for waiting. Now, our webinar today is about digital ID verification for onboarding. My name is Tony Payton, Deputy Editor at FinTech Futures. I'll be the moderator today. Also on your screens at the bottom, you'll see some resources. So by all means, if you want more information, click on those, and hopefully you get as much information as possible. Now, for this live webinar, as I say, everything's live. I'm joined by Joe Bloemendaal. He's the VP Sales in the EU for Mitek. And I'm also joined by John Devlin. He's the founder and lead analyst at P.A.ID Strategies. And they'll both be doing the presentation. So it's over to you guys. Good luck.
Thank you very much. Let me just cue the first slide. So I'm presenting an introduction and summary from two assessments that we completed in the past few months. The title for this section is From the High Street to Cryptocurrency, Digital ID Verification for Onboarding and Compliance. A quick introduction to ourselves. We have over 15 years analyst and consulting experience. Our focus is around payments, authentication, identity, security and connectivity. Our primary setup is to address innovation, looking at disruptive technologies, strategies and companies, providing information to companies to help make better decisions in terms of planning and moving their businesses forward. So, close correlation between sort of those four key areas that I've just highlighted as our focus, and we look to understand the effect and impact, addressing the barriers to adoption, and looking at the different market factors and trends influencing the market in terms of devices, technologies, platforms, and service mix. So moving on to the content of this presentation, looking at regulatory developments and impact. There's been definite activity building in the cryptocurrency space. We're looking and have identified a number of areas. This slide is a little text heavy, for which I apologize, but I wanted to get the detail down for people to be able to refer to afterwards. Primarily government-led, but in reaction to that, there are a number of industry-led developments occurring, and we've seen countries like Japan leading the way in terms of regulation and registration of crypto exchanges. Similarly, South Korea, whilst it hasn't implemented any formal regulation, we have seen that a number of exchanges have voluntarily put themselves forward for evaluation to ensure that they're meeting criteria as laid down or expected to be laid down by the government. Their thinking is that they will be able to offer continuity of service and plan in advance and help influence how the market and the regulation and the changes develop in the future. Other countries have taken a much more stringent approach. China, subsequently India in the last few months, have been clamping down and placing restrictions on crypto exchanges and the use of cryptocurrency. More similar to Japan and Korea, Australia has drawn up guidelines for anti-money laundering, data protection and securities of ICOs. Its aim is to ensure that there will be smooth acceptance, high delivery of service, and quality of service in terms of moving forward and ensuring that best practice is adhered to. The US is a little more mixed in terms of its approach. We've seen some very progressive states, and it is generally that there's the capability of the states to determine on their own what their approach to cryptocurrencies is. New York, for example, is one very progressive and has been discussing forming a cryptocurrency task force to draw up guidelines for best practice and recommendations around regulations and legislation. Again, looking to ensure best practice to minimize risks to investors and to companies involved in the market. We've seen in other countries, Switzerland, similar to Australia, has provided guidelines for exchanges and cryptocurrency transactions. And we're seeing other leading exchanges looking to adopt additional measures, bringing them more into line with established financial services and their best practices. Looking at in terms of monitoring trading and transactions, identifying potential fraud and risk to the market, and looking to become more regulator friendly in terms of how they go about their business in the future. Specialist groups have been formed. Crypto UK is one of those, where a number of service providers have come together. And then in the European Commission has stated that it recognises the fact that cryptocurrencies are not domestic or localized, they are global currencies, and that it stated that it wishes to work across governments and regulators in broad, wide-reaching countries to ensure that there's better understanding and management around crypto assets. So that brings us to the 5th Anti-Money Laundering Directive, following on from the 4th Anti-Money Laundering Directive. That only came into effect in June of last year. It was released 2 years before that in 2015, and obviously at that point in time there was very little or much less understanding and activity and interest around cryptocurrencies. It's still an emerging area, and the regulators have been working since then to catch up in terms of how they might address this market. And there have been a number of developments which we'll discuss later on in terms of stories coming forward, issues that have been encountered, and trying to ensure that cryptocurrencies are brought forward and services provided in a proper manner. So AMLD 5 comes into effect at the end of 2019, and it extends the remit of AMLD 4 to ensure that crypto exchanges and custodial wallets, which respectively are referred to as virtual currency exchange platforms and obliged entities, it's there to ensure that these companies are able to address concerns around money laundering or illicit financing of criminal or terrorist activities. This comes into effect at the end of 2019, so less than 18 months away now. And a large part of the motivation, in addition to the concerns just mentioned, is around the interaction with fiat currencies and the level of speculation that saw massive inflation in terms of valuations occurring at the end of last year. Subsequently, that's crashed, and they're wishing to ensure that there's a little less volatility and a little less risk in the market, while still trying to enable the market to develop and to grow, to broaden its appeal. Another area of regulation affecting financial services is the 2nd Payment Services Directive. That came into effect earlier this year, and that allows customers to use third-party service providers to manage their finances, introducing the concept of open banking, which is a phrase that's become very familiar to most of us in the past 6 months. With customer authorization, third-party providers are able to access account information and data, and you are able to authorize them to conduct transactions on your behalf, interacting with your finances and your bank accounts. There's increased opportunity for cross-border services, and the aim, or one of the aims behind PSD2, is to try and create a more unified market within Europe for banking and other services. It does stipulate the requirement for strong authentication to ensure that there's effective KYC and to minimize risk of abuse. It also introduces the ability and the potential for banks to, or for consumers rather, to use existing and verified identity and financial data in one country. So if I have a bank account here in the UK, I wish to travel to Scandinavia, perhaps I need to open an account there, then there would be the ability to authorize the Scandinavian bank to access my UK information to prove that I am who I say I am and I have a financial history and records available to them. The aim is to minimize bureaucracy and to reduce barriers to international use of services. Within strong customer authentication, there are three key remits in terms of knowledge, possession, and inherence. So knowledge is details about who I am, providing that information. Possession could be use of a device, a verified device that I could use to access or authorize services. And then inherence is something that I have. So that's looking, a lot of that's focused around biometrics, facial recognition, and how that can move forwards. This all relates to greater use of multi-factor authentication for transactions. So competitive drivers and pressures in the market. The banks are the traditional gatekeepers for our finances, looking after our money, providing additional services to us. As such, they've had regulation which they've had to comply with for a number of years. Developments around the anti-money laundering directives, and then subsequently PSD2. Also GDPR as well is another factor for them to consider in terms of how they go about their businesses and how they offer their services. The implications for them is that actually now compliance is perhaps the biggest motivator or factor for banks in terms of how they do their business. Increasingly, they've had to provide and accept, or will increasingly have to provide and accept identity across borders and interact with a broader selection of companies as the market develops around open banking. They have to balance the use of their customer data internally, but also in terms of how they provide that externally as well. And that does impact upon digital identity verification as well in terms of how the data is transmitted, where it is located, and how it is well in the future. All of this increases the demands on data and services in terms of how they operate and their procedures behind. So in terms of risks or drivers for them, they need to look at, they need to change their thinking from fear in terms of compliance to opportunity and how the changes are opening up the market for them. There's the potential to make better use of data and analytics to generate useful insight and engage with customers much more in terms of their spending, their use of services, and helping them manage their money and finances better. This could all combine to create a much more customer-centric environment for them, as well as enable more collaboration and interaction with third-party providers. In terms of digital identity verification, identity and strong authentication procedures minimize the risk and automatically ensure greater compliance with regulations. In terms of the authentication process, it doesn't have to be a barrier to adoption. There's modern digital solutions that can be seamlessly integrated with their existing systems and infrastructure. And it can actually reduce the time to market in terms of activation and onboarding customers. All of this can help form a smarter digital identity platform, which can be part of a positive digital banking experience. And identity, as such, can become the cornerstone for new services, particularly in terms of third-party providers and the means in which they engage with customers. In the crypto world, obviously a much more nascent market, still emerging, still developing, and finding its shape. As mentioned, many of these regulations are now being extended to crypto exchanges and custodial wallets, the 5th Anti-Money Laundering Directive specifically highlighting this. The aim is to create a safer environment, make it more reassuring for users. This would, whilst it could increase the level of bureaucracy and administration initially, it could also increase the potential for mass market adoption, broadening the user base, making it more user-friendly, and providing a much greater level of reassurance in terms of best practice, addressing some of the risks and the negative stories that have related to cryptocurrencies over the past year or so. Specifically, this includes the volatility in the market that was experienced in 2017, rapid growth followed by a steep drop, which the market is still recovering from, and it's not yet to sort of half the levels that it reached in late fourth quarter or early fourth quarter 2017. There have been concerns in terms of the level of anonymity of users in terms of anti-money laundering, tax avoidance, channeling of funds to sensitive people and politically identified people at risk as well. There have also been a number of thefts and hacks that have affected the market and been widely reported. CoinCheck last year was reported as losing over $500 million worth of cryptocurrency when it was breached. That money can't be currently can't be regained. Excuse me. And so to minimize the risk, regulators are trying to put in place structure to minimize poor practice, to introduce greater efficiency and safety within the operational processes. Even just this April, 2 months ago, there were 2 exchanges in Japan that were reported as being shut down by the regulators for 2 months for non-compliance and for failure to adhere to the KYC regulations that are in place there. So it just highlights some of the risks about not meeting the requirements of regulators. It's not an optional exercise in these countries. In terms of, excuse me, in terms of implementing strong authentication and digital identity verification, it does create it's often the key first touch point when interacting with a service. So it's an important part of the process as it forms that immediate impression between customers and service providers. It does clash with the anonymity that's been a point much talked up and is a strong belief among some early adopters in the crypto world. They've made a point of not being part of the establishment and wishing to avoid the bureaucracy and the administration that comes with that. However, on the plus side, it does also enable faster activation and readiness to trade, and it also, for the wider market and for those that are interested but maybe a little put off by some of the negative stories that have been circulating, it's likely to address those and in turn subsequently increase acceptance and provide greater credibility of the service. And not just for users as well, also for those involved with the transactions, merchants and other service providers that would be accepting cryptocurrency payments. So specifically around digital identity verification, it's very important, as discussed on the previous 2 slides, for service providers to be able to adhere to anti-money laundering regulations and to deliver and enable strong know your customer measures, and particularly important for them not to be disrupting their businesses, their operational procedures, providing barriers to onboarding customers. And digital identity verification certainly addresses these points. Implemented correctly, it can actually enhance service providers' onboarding experience and improve user perception of the service that they're providing. And I'll talk more about this when discussing the 2 assessments that we've done recently. Digital identity verification can be the cornerstone for service providers to offer additional services, either directly to consumers or via partners, as referenced with the PSD2 implementation. ID verification creates opportunities and helps service providers manage the risk to which they're exposed. It's very scalable, it's reliable, it's very low friction and seamless, as we discovered during the assessments. It offers more security and can be flexible with different variations or implementations that can be conducted either in-app using a mobile device, either online using a webcam, or through uploading documents as well and them in. Those are certainly three of the areas that we, or three of the techniques that we saw, and definitely helped companies score higher in the assessment. Additionally, digital ID verification can make the process faster, onboard customers, and enable them to transact much quicker than some traditional solutions and approaches. At this stage in the market, it's certainly a differentiator. It improves and provides a better user experience, and it's been proven and tested now in a number of implementations. So there's very little barrier to future adoption and greater integration into services. So the first assessment that we conducted took place towards the end of 2017. Specifically, we were looking at the UK market in terms of banking, banks and service providers, and we wanted to conduct a comparison of the traditional incumbents and the challengers or neobanks that are emerging and have now got commercial services in the market. We wanted to look at how customers were onboarded, how seamless that was, and banks are talking up their ability to be digital organizations and to offer services online. This is at the same time as we're experiencing here in the UK, increasing branch closures as banks are looking to minimize their ongoing expenditure, improve profitability. So digital services, either mobile or online, are very important to maintaining customer interactions and providing a high level of service. And that has to include from first point of contact, from opening the account and enabling me to transact. And so that's why we conducted this assessment. The three areas specifically that we looked at and scored within the assessment were the account application process, then the ID verification process, and then the ability to transact, the activation, the final activation process stages, which typically followed ID verification, and how that whole user experience built up and was presented and influenced by the ID verification. The major findings from the survey, or the summary points, were that overall in the UK, the banks have yet to make significant progress in terms of being truly digital organizations. Many enabled the ability to open accounts online, but then there were barriers and stumbling blocks in terms of identity and activation. The focus has largely been on the front end in terms of making the application. We found that this often fell short when it came to proving our identity. There were a number of instances where we either had to stop, copy, post, scan documents, send them off in the post to the banks, or take them in ourselves, which, with less branches available and still having a mix of urban and rural customers, could involve quite a significant journey. And at that point, if I'm able to complete the process online with another organization, I'm much more likely to do that than to stop everything and wait for several days or even weeks before I'm able to activate my account. It's a big hurdle in terms of the customer and how they interact with their organizations and which service providers they choose. Two of the challenger banks we found had delivered a very good process. This was Starling Bank and Monzo as well. Both of these organizations were sort of digital, mobile-led organizations. It obviously had an advantage in terms of being able to start from the ground up and how they designed their processes moving forwards. But we found it very refreshing in terms of their approach. It was very seamless, very low friction. We had very little trouble in completing the process. And we were all able to do this within the app very quickly. The whole process took a matter of minutes with verification and approval of our identity coming through very quickly after. There was very little delay, and it contrasted very much with the traditional incumbent providers that we have here in the UK. Of those, there were different approaches that have been implemented. Barclays was one which used knowledge-based criteria regarding financial history and data. However, we did note that this was subsequently just after a major data leak from Equifax last year. So, highlighting the risk of a lot of that information would be available in the public domain and doesn't meet the requirements of strong authentication. RBS was the only incumbent that provided a truly digital service. It didn't quite match the level of Starling and Monzo, but it was a very good start and enables us to complete the process all online. I did find that this process in terms of account application and being ready to start and use our bank accounts massively affected our perception of the bank. Those that had the biggest barriers, least well-designed application process, some of them were almost intrusive in the level of detail that we wanted that wasn't really relevant to services that we were providing, but it was around them gathering data on us and being able to then look to leverage that in terms of providing additional services. That created a very bad impression of those banks. And contrasted very steeply with the more modern digital approach, much faster and much more agile than in comparison. Moving on to the crypto assessment, which was completed just last quarter. Excuse me. We looked at a bigger number of companies and organizations, given the news and the activity that's been surrounding this market. We wanted to provide an assessment in terms of identifying or understanding how ready the market is in terms of AMLD5. This has been ratified now, fully published, and we're less than 18 months away from it coming into effect. So we wanted to understand how ready service providers were in terms of this. Specifically, we were looking at the exchanges, their interaction with fiat currency being a key requirement or reason why they're being regulated, and then also the custodial wallets as well, classed as payment accounts or payment services by the European Union in terms of the law and the regulation that's applied to them. So it was those were the key areas. In terms of questions that we had, we wanted to know how ready they were for implementation. Are they planning ahead and thinking strategically in terms of how they develop, how they enable the market to develop further in the future as well, in terms of broadening the appeal and improving perception of their services and cryptocurrency in general. We did focus much more on the ID verification, but we did also look at overall perception and the application process in terms of how seamless that was. So in terms of the results that we pulled from that, we found that the vast majority, in fact 68% of companies included within the assessment were non-compliant with future regulations. Now, I should be clear, obviously, those aren't in effect now, so it's not current regulation, so they're not failing the market. But it does highlight how far the market has to go and how much it has to move in terms of ensuring that it is compliant when the market, or when those regulations come into effect next year. There was a big difference we found between the companies that were already compliant in advance. They gave a much more professional level of service. They provided much more information about themselves and their services, and were much more addressable and provided better insight and understanding in terms of their services and what they offered and how to make use of them and how to interact and engage with them as well, than those companies that were not compliant. Some provided additional levels of information, but the majority were quite opaque and took much greater effort from the user to understand how they should use the services and how to register and move forward. So this mixed approach that we found, some were very clear and upfront in terms of the identity verification requirements and what they were going to do. Others we found brought in ID verification later on, and you'd be ready looking to make your first transaction, and that was the point that you then found out you had to verify your identity and to provide government-issued credentials that they could record and register to meet the KYC requirement. It's not necessarily a deal breaker, but it certainly gets in the way when it's unexpected and not clearly flagged in terms of what the process should be and what the user should expect. Others were different and then would introduce for higher level transaction volumes. Once you reached a certain level, that was when the identity verification kicked in. A number that we picked out of exchanges and wallet providers, Luno, Coinbase, Gemini, and Poloniex, all had very good digital ID verification, much as we found with Starling and Monzo in the banking assessment. Very quick, very fast, enabled us to get on board and to start transacting very quickly. And I think that's particularly important in terms of cryptocurrency with the level of interest and interaction. People want to be able to start straight away. They're not prepared to wait. And we did find that some, whilst they had implemented ID verification and may have had very good messaging, but then they were saying that you had to wait 5, 10 days, somewhere up to 2 weeks for your verification to be returned, by which point it would be quite understandable if the customer has lost interest or moved on to another service provider that's enabled them to get on board much quicker. So in terms of, to wrap up, in terms of the summaries and the main conclusions from the two assessments, it's quite clear that at this stage, whilst it offers a great number of benefits still, identity verification or digital identity verification is in the minority. And the question is, I think that we will see much greater adoption in terms of this. In the banking world, it's held up by the legacy mindsets in terms of, right, now we have to see the document and you have to send that to us or send us a copy and then we'll get back to you. It doesn't have to be like that. In the crypto world, it was much more around the lack of understanding from some companies in terms of what regulation was coming through, or actually a lack of desire in terms of they wish to enable their customers to remain anonymous and relieve themselves of that responsibility. This does leave the door open to competition that have much better services and I think offer a much more professional and greater level of customer service. The onboarding process and the activation is a clear differentiator, and failing to minimize the barriers here with long activation times or unnecessary requirements or intrusive questions certainly harms the perception of those companies, service providers. On the banking side, we looked at the 4 main leading banks and then the 4 most established challenger banks, and only 2 of the 8 had got truly digital identity verification processes. In the crypto side of things, we found that only 8 of the 25, so 68%, failed to have those in place. The ID verification is a clear opportunity for companies to stand out, and companies with a much more nimble, modern approach can seamlessly integrate this process without causing obstruction or difficulties with their existing infrastructure and service. Just to summarize my final comments on digital ID verification, we found that it enables service providers and improves customer service, actually creates new opportunities for service providers in terms of customer recruitment, onboarding, and interaction with partners and third-party providers. It meets the modern market demands and the way that we use services through digital, through mobile, through online. And it also meets the modern customer expectations. We're used to very quick turnaround of services, very quick onboarding. This is the world of Amazon, Netflix, and Uber. So we expect those services, those types of interactions in other areas as well. And also it's fully compliant in terms of meeting regulatory needs and addressing wider concerns and the perception of those services. That is my section completed, and I will now hand over to Joe, who will talk through his presentation.
Thank you very much, John. I think there's a very clear message coming from both surveys that there's a lot of work that can be done to differentiate yourself, both as a bank or a crypto exchange, by improving KYC processes, improving onboarding processes. So hello to everybody. My name's Joe Bloemendaal, and I'll introduce you to Mitek, a global document verification company, and I'll show you how we are positioned to help address some of these challenges that John explained to us and covered for us. I think he clearly said that there are still several verticals that can be a KYC process can be a differentiator. So we will look at the services that we have, but at the end I'll show you a demonstration of how our technology works, so that should be interesting. Then we'll open up the floor for questions that you might have, so please feel free to ask us anything that you'd like to know. So Mitek is a Nasdaq listed company, and we are headquartered in San Diego. We have offices in Amsterdam, Barcelona, London, New York, Paris, and St. Petersburg these days. So that means that we have a global spread of teams around the world to support our clients. And looking back into the history of the company, Mitek has a great legacy in image capture and image processing. We're the inventors of mobile deposit, and in North America, that product allows people, consumers, to deposit their checks through the mobile phone, and by now we've processed, I think, in the excess of 1.5 billion images, and allowing us to develop products and services that are completely focused on image processing. Just by having this legacy, we have proven user experience. I mean, these images have been uploaded and processed from 80+ million consumers around the world, and that gives us a great base to leverage that technology in other areas of document verification. So with the global document coverage that we have, we can verify and authenticate thousands of identity documents globally. We are a trusted partner. A lot of our clients are banking and financial institutions, as you can imagine, more than 6,000 globally today, and they specifically like the fact that we're open, transparent, that we are very used to supporting enterprise-sized customers that are regulated. And of course, we are a company that cares a lot about security, and that means that we have the necessary ISO certifications, one of which is the very famous 27001, and we've been accredited by multiple institutions for that. Now, moving on into the territory that John also talked about a bit, there's quite a few key drivers in the market for our type of technology, one of which obviously is the regulatory one, AML D5 and 4, PSD2, lots of them out there changing rapidly, but also the whole context of why these derives come out is very important to us. So there's terrorism, lots of identity fraud that's actually soaring, as we all know, rapid globalization, and that we need to have structures around us to keep us safe, to keep our data safe, and to protect us from theft. On the other hand, there's these user experience demands, the digital natives, people who are mobile first, a lot of us will be, expect, like John just said, instant services, even if it's a red tape process, even if it implies paper-based documents. We still want something to be done in a very seamless and frictionless way. So these two seem to be in a bit of a conflict, but Mitek does have ways to help and to address them. And the economic driver, obviously, is a very important one. We know that the numbers speak for themselves. The AML and the KYC compliance costs are soaring, really. An average bank is spending tens of millions of euros, dollars, pounds per year to keep up with the compliance, and there are ways to reduce these costs while creating competitive differentiation as well. So the Mitek advantage, continuous learning, not just the people at Mitek themselves, but obviously the machines that we have. Artificial intelligence and machine learning and deep learning are helping us improve our systems continuously. And there are really three things that you would need to do that well. You need quite a lot of images flowing through your systems to teach the engines what to look for. Remember, we do verify identity documents, and that means that we need to be able to find the ones that are fraudulent. And to do that, we need to see a lot of documents flow through the systems and test our algorithms based on the real world examples. Well, with 2 million documents and transactions flowing through our systems every month, sometimes more, that allows us to train these systems. The second thing we need to know is what a document should look like. Document expertise is critical in our team, and we have trained and certified document experts, and they provide the expertise to our engineers to train and to develop our systems. And then on top of that, obviously provide the quality metrics and the quality measurements on our algorithms. And the base of all of that is really the resources and the money to invest in the engines under it. And our technology is all proprietary, and we have a robust team. We assume at the moment the largest team of PhD and MS scientists that are experienced with computer vision, data science, and deep learning. So if you look at our product suite, we do offer several different ones. Mobile Fill on the left is a tool that will capture the image of the document and then extract the data and then accurately and quickly structure the data and give it back through an API to our client. All the way on the right, you see our Mobile Ducks product that can take an image of a document and transport it safely in the same data flow as the Mobile Verify product that we have in the middle for trailing documents. And that's our largest suite, Mobile Verify. It's real-time identity document authentication. And I'll talk about that in more depth in a minute. We also offer face comparison, often referred to as anti-impersonation verification. Once you've uploaded an identity document with Mobile Verify, it would be good to know in many cases, at least if you need to be compliant, you'd want to know if that person actually who uploaded the document is the holder of the document, the owner of the document. And we use biometric and extract the image from the, let's say, passport, compare it to the selfie that the consumer has taken, and we can match them and see if that's the same person. But it all starts with a good image. Like with any system, rubbish in is rubbish out, and that applies to Mitek's technology as well. So remember I told you about Mobile Deposit, our product that has run 1.5 billion images. Well, that's at the core of MySnap. MySnap is a capture tool that does two things. It ensures that we have a good quality image, the best possible quality in the circumstances, the environment that our customer is in, as well as take the friction out of the process. For many people, this is a one-time, 2-3-time process in maybe in their life to upload an identity document to open a bank account or some similar service. So you don't want to burden them with how to take that image. You want to offer technology that will do that for them, and that's exactly what MySnap does. It looks at several things. So it'll look at the background that the document is in. Is it too dark or too light? It'll look for glare, as you can see on the image. It'll look if the image is sharp. It'll find four corners, etc., to absolutely get the best image we can capture in the circumstances that the consumer is in at that moment. And here is a good visualization of what happens if we don't use a tool like MySnap. On the left-hand side, you can see if you ask people randomly to take an image, they don't look for glare. They might not be close enough to their document to take a good image. You could imagine that if it's too far away, by the time our systems have blown up the image, we've lost a lot of detail, and we're still looking for that fraudulent document, and we need the detail to be able to find that. Or if we can't see the complete document, that becomes a challenge as well. So our product MySnap will help focus, center the document, find the whole document, and then once it's found that and it's happy about that, it'll capture the image automatically for the consumer. Now moving on to our product Mobile Verify, which really does bridge the gap from the physical to the digital world. Our clients typically are obliged or would like to verify somebody's identity, and they want to be able to rely on the source. And there are other methods of verifying somebody's identity, or asking the consumer to prove their identity, and one of them is face-to-face interaction. Ask somebody to come into a branch, for instance. Well, we all know that most people don't like doing that anymore, don't expect they will have to do that, and if they do, they're probably willing to do that at times that branch might not even be open. Alternatively, you could use data from credit bureaus or even knowledge-based authentication, and both are at risk with all the data breaches now, and most people, frankly, don't even know the answers to their own KBAs anymore because they have to become so specific that it's challenging for a normal person to remember information from years and years ago. So relying on a governmental issued document and a system in between that will capture a good image and verify that document, the authenticity of the document, becomes a very safe way of moving forward. It does come with the caveat, obviously, there has to be frictionless and easy to do, otherwise the consumer might not want to do that. So what does Mobile Verify do? Well, it sits in between exactly what I just said. It offers a seamless user experience as well as very strong identity verification. And that will allow you to say yes to more good customers. I like that. It's not trying to just focus on fraudsters because there's only very, very small percentages out there of fraudsters in the grand scheme of things. So what we're trying to do is get people through these processes as quickly and as frictionless as we can. And that will decrease the abandonment, because where there's friction, people step out and they'll try and find a different route in. John just alluded to that with the crypto exchanges. If people have to wait days, whatever days, 5-10 days, they'll probably or will likely move on to a different similar provider because that will allow them to transact much more quicker. It will also meet your regulatory requirements. because systems like Mitek do verify the identity documents typically better than most other of the processes, and it does cut the operational costs of having branches, cuts the operational costs of having bypass routes, etc., etc. So now I wanted to take you through a couple of live examples. So clients that we work for today, and one of them we're very proud to have on board is MoneyU. MoneyU is started off as a fully digital savings account. Today it's a completely digital bank, and they need to onboard new customers anywhere, anytime, as you can understand. They don't have any branches, so there's no way of them asking their clients to come somewhere to prove their identity. So we teamed up with them. We provided Mobile Verify in their app, and that allows them to capture the image with MySnap and then prove their identity through that way. It's been very successful for them, and we also populate the application forms and bring down the onboarding process to sort of around a minute, and that's much quicker than whatever they've seen in the past. So here's a very good example of how these two circles we saw in the previous slide come together. Frictionless, an easy way to onboard myself, because that's the user group that MoneyU targets, but they need to be compliant. They are a real bank, regulated bank, and there's no way to move away from that. And this is another very interesting case, a company called Knox, and they needed to become compliant using their customer journey. And one of the bigger challenges for them was abandonment. As this crypto exchange started growing rapidly, became very successful in the last couple of years, they were struggling to keep up with the manual verification of identity documents. They had their own teams doing this, and at some point it took a day or more to verify the identity, and we talked about this before. That always results in very high drop-off rates. And they implemented Mobile Verify and to allow their new customers verify their identity. After the first 6 months, we saw an immediate positive uplift, but they grew their user base by 214%, and the abandonment rate dropped dramatically. And the onboarding process today with Knox is around 5 minutes instead of 12 hours or more. And the last one I'll quickly touch on is BTC Direct, a leading cryptocurrency broker, and they too were experienced rapid growth, and at some point onboarding 3,000 new clients requests a day. They need to be compliant, obviously, but they want it to be frictionless as well. And with the Mobile Verify tool integrated, they can now onboard their customers and stay compliant in as little as 10 minutes. And people like to onboard quickly and start trading and interacting. John just talked about sometimes there's this two-step situation where people first onboard with a light verification or no verification. Once they start transacting or transacting above a certain threshold, they then have to start proving their identity. That introduces friction at the wrong point. With Mobile Verify and MySnap, you can grab all of that in one go, get the person on board to a level that is compliant, and then they can just freely start trading and transacting. Let's have a look at the technology when it's working live. So here I have a couple of videos of what MySnap and Mobile Verify look like, and I'll briefly talk you through them. We have a demo app. Mitek doesn't sell apps, but this is a demo app that we have. And here I'm going to capture an image of a document. This is where MySnap is working, and we intentionally blurred the image because we don't want somebody's PII out in the open, obviously. And what you saw, and it moved quickly, appreciate that. We're happy to give you a live demo if you're interested, is that the user grabbed the passport, put the device near to it, and as they moved around, MySnap was telling them what to do: get closer, move a bit further away, hey, there's glare here. But when he was satisfied, it captured the image automatically. And the next step in this example process would be face comparison. And to do that, we need to capture an image of a face, a selfie. And really, with selfies, liveness detection is a key element of that. And you'll see that in action as well. So there's two things important. We need to capture a good image of the face that we can then compare to the image on the document, but also we need to make sure that the person was live in the process, that somebody didn't steal somebody else's image somewhere from the internet and is using that to get through the process. Here we see start, and the consumer brings up the phone and is asked to blink, and at the point that they blink, that's when the image is captured. We're doing both active anti-impersonation checking here, the blinking, but also passive. So in the background, before the face is actually in the oval, we've already done a lot of checks to make sure that the person is really alive in the process. Now, if we quickly look at what our results look like, obviously our typical client would absorb these results through an API and then into one of their back-end systems. But you can see here clearly in the video, it's moved down by now, and it's blurred because it's PII. But you could see at the top, up at the top, that there were all the green bars, and we translate the results of both the document verification and the face comparison to a score, and then we will give that back to our clients, and then they can decide what to do with that. In this case, they were all green because the person was actually using their own document, and that's the way you can translate the result into the full KYC process that the clients would be using to decide if they would want to onboard that person or not. That's it for me for today. I think the floor's open for questions.
Okay, thanks, Joe and John. That's great. A lot of information there for people to digest. Now we're on to, this has all been live, so hopefully you enjoyed it. We're also going to do a brief live Q&A because the presentation was a bit longer. Now, I've got a question from the audience. That's great. Let me ask this to Joe and John. It's quite a long question. And the person asks, can traditional banks keep up with the digital advances such as Starling and Monzo and compete with their efficiency and fees when they still have all the overheads of the high street banks, and in many cases their back-end systems are out of date and extremely cumbersome?
Okay.
First up, John, but please jump in. I think the answer is yes, they can. So what does Starling or Monzo have in advance of a traditional bank? Typically, that's the technology we've just been talking about. So digitally onboarding people, authentication digitally, and I think adopting that sort of services and then turning the traditional systems and having the branches into an advantage is certainly something that will keep them in a competitive position. I think the offices the branches will turn into service offices more than sales, because that will be done through digital channels. So yes, I think there definitely are opportunities for traditional banks to stay ahead or on par with the new guys.
Yeah, I would agree very much with that. I think in terms of identity verification, there's no reason why they can't match the challenger banks. There's certainly not doing it, or requiring customers to travel, deliver documents in person or via the post is just creating barriers and giving an advantage to the challengers. I think as well, just in terms of a general comment, I think that the high street banks have a much broader portfolio of services that they can offer, many of those are the profitable ones, or more profitable ones. So maximising those in conjunction with a smooth onboarding process and getting companies or customers in and transacting as quickly and easily as possible, making them as attractive as possible, is certainly a way of competing with them.
Okay, good, thanks. Yeah, the issue of challenger banks and high street banks comes up a lot, and we write about them a lot. It's certainly an interesting duel. Now, ladies and gentlemen, as I say, because the webinar is a bit longer, we can't really do any more Q&A. But what will happen is Mitek and P.A.ID Strategies will get in touch with you and individually and answer those questions that you sent in. So we do appreciate what you sent in. We also appreciate you listening and watching. So on that note, I'd like to thank John and Joe for their great presentations. Thanks. Okay. And so that's it, ladies and gentlemen. Yeah, thanks, guys. So, ladies and gentlemen, you'll get also, if I just remind you, because you registered for the webinar, you will get a link in an email so you can watch the slides again if you've missed any parts or you want to clarify information. But that's it for me, and that's it from John and Joe. So thanks very much, and the show is over.